Good morning, ladies and gentlemen, and welcome to the show. I'm glad to have you guys here. Today is December 13th, 2018, and it's Friday. TGIF, guys. Let's get started. Let's open up the charts right here, and let's take a look at what's going on. First thing we're going to take a look at is the silver price. And we see today at $16.92. Now, there's only one way that they can keep this system really going the way it is right now. And that's going to be bullish for gold and silver if they try to keep this system going the way it is right now. What they need to do is they need to keep bond rates low, bond yields low, very low, right? They need to keep the dollar down. They need to decelerate the dollar and keep the dollar down. They need to keep flooding the system with cheap, easy liquidity. You know, these are things that they need to do. They need to keep stimulating the economy with central bank policy, most likely quantitative easing, and they need to keep the repo market supported. They need to keep this repo operation. We see them moving in this direction right now. We see them doing what they need to do to keep this system stimulated and going. It's going to be bullish for gold, guys, and it's going to start to be more and more bullish as they pull ahead, and we see the system they have to keep that momentum going, because if they let it slow down any, now at this point, it's going to crash. It's there's a law there. It's a law of physics. I'm not exactly sure what it's called, but it's kind of like stretching an elastic band, The further you stretch an elastic band out, the more it wants to go back to its original shape. And the only direction that they can keep going with this is to keep that momentum going in the system. Keep the stock market surging up to new highs. And they have to keep pumping in this stimulus. Well, it's the way it's working is something like a hockey stick, the old hockey stick maneuver where it goes exponential. And that's what they're pushing into. They're pushing into exponentiality. I guess you'd call it exponentiality. It's going to break. And when it breaks, it's going to be spectacular. Then it's going to require an amazing amount to turn that around once it breaks, So that's where we're going. Pressure's building. $16.92 for silver. It's up 2 cents on the day. So we see it in a range here, but it's silver and gold starting to turn positive. They have been for a while now. And they're going to continue to turn positive as long as they keep driving all this money into the system, The more money they drive in, the more it's going to turn gold and silver positive. Let's take a look at gold today. $14.73. It's up $3.70 on the day so far. I think we're going to break past $1,500 pretty soon. We did before, and then we broke back down again, But let's take a look at cryptocurrency today. Cryptocurrency's really been going nowhere. It's 198 billion. It's staying under 200 billion, but it's just going along sideways. So there's not a whole lot to talk about with Bitcoin at 72.38, Ethereum at $144. We're looking at Bitcoin Cash at $208, $43.88 for Litecoin, and EOS is $2.62. So those are your coins, and they're not going anywhere. Let's take a look at the Dow Jones now. She's up 20 points on the day. Even with all of this money that they're pumping in. Oh, and we're going to get to something in a minute here. It's only up 20 points on the day. 28,152. So it's setting all new time highs, the Dow. They got to keep it going. They can't stop now. They can't pull their foot off the accelerator. Let's take a look now at crude oil. 59.35, and it did take a little spike downwards there. Let's take a look at the one-day chart. You can see that little drop because it was up 59.96 it looks like, and now it's 59.35, so it took a little drop. Now let's take a look at U.S. Treasuries today and see what they're doing. Seeing Treasury yields falling. Now this is the direction they have to keep moving in. They have to keep the Treasury yields down. They have to keep the dollar down. And they have to keep enhancing the markets with stimulus. Quantitative easing and the bailing out the repo markets every night. They have to keep that going. It might actually require more than that to keep that going as we progress toward next year, you know, in order to keep the market supported. Because we're going to get things that are coming at us out of nowhere next year. Things like Brexit. Brexit could be back again. Now that I guess I heard through the grapevine Boris Johnson had a win, you know, and now they're going to have in their parliament they're going to have a majority, I guess, you know, so they can get things passed. That's what I heard anyway. Let's take a look now at the U.S. dollar index. There, see, they're keeping a weaker dollar, you know. We're starting to see a trend now, a little trend developing. It's just starting, so it's early days. But if we take a look out over the last 3 months in the dollar, we can see this trend developing. It started right about here, about 3 months ago, and you can see the dollar starting to descend. It's a descending trend in the dollar. Now it's down below 97. It's in the 96s. 96.96 today. So see this little trend developing in a weakening dollar. This is what they need to do to keep this going, to kick this can down the road a bit longer. But I don't think they're going to be able to kick it all the way through 2020. I think the market's going to take a big tumble out of bed, and then it's going to require a massive effort to get it back up again. But you know what? Doesn't matter what that effort is or how hard or what they have to do. They're going to do it. They have to do it. That's why. It's one of those things where you have to do it. You know, there's different things you come at in life, you know, different maybe jobs or whatever, and sometimes you hit something that you have to do. It's kind of like if your house is on fire, you have to get out. You know, there's no other choice to you say, well, I'm going to stay in here and have a cup of coffee, you know, and just sit around and watch TV for a little while. But he says, but your house is on fire. I know, but it'll wait. No, you have to get outside. Right? Well, that's the way with the Fed. When these markets finally do turn over sometime next year, and I mean they come down 20% or 30% or whatever, the Fed has to, they don't have a choice, they have to bring those markets back up again. Or the whole system will implode. So they don't have any choice. They know they don't have any choice. And that's when we're going to see the big monster stimulus like you've never seen stimulus before. That's when they're going to have to go into full blast modern monetary theory, where you just basically support the entire system by printing money. You want to talk about rocket fuel for gold and silver. That's when we blast off to the moon, because that's when they're going to be able to fill the tanks on the rocket ship that takes it to the moon. You know? Okay, that's what's going on. So let's take a look at this article here. Trade deal. They're never going to make the language of the trade deal public. And nobody will ever see what the deal actually states. So, my big question is, this trade deal between China and the United States is phase one, where Trump has been coming on here all the time and doing tweets, oh, we're close to a deal. Well, evidently now they got their deal, But the Chinese have requested that the language of the deal never be made public, so we don't know what the deal is. And the second part is nobody will ever see what the deal actually says. So do we really have a deal? I don't know. Or do we have a deal but it's just secret? I don't know. But one of the things is they're not going to come up with a second part to this deal for until past the elections. Right? So if they do all three of those things, we're not going to hear any more of this stuff coming out where it says, we're close to a deal, and the market goes up. That's over. That's over. Anyway, because I was getting sick of that anyway, Now, this article, China they're into a downturn, and it could last 5 years, warns the Central Bank of China. 5 years of this downturn. I think it could last longer. But you know what? They're saying that their GDP will decelerate to possibly a range of 5 or 6%. Where do they come up with these numbers? Their real GDP right now is probably like 1 or 2%. Getting real about it. It's just arbitrary. It's all arbitrary. They just come up with these numbers arbitrarily, But I'd hate to be the policymaker in China I'd hate to do that. I wouldn't want to have that job of having to print the number. It'd be like, what do I do? I don't know. Make it high. Whatever. I don't know. I just wouldn't want that job. Forget it. They can keep it. Anyway, listen. Thank you guys for listening to the show. Like and subscribe. Give me those thumbs up. And, the Chinese economy, the Chinese ship, it's leaving the shore and it's going out. I'll tell you, I don't know. The Chinese economy is going to roll over hard. We are going to be in a recession next year. Recession's going to start in 2020. And, guys, it's going to be a bad one. Bye-bye, guys. We'll catch you on the next show.